Today we've got the training session that I've been promising you guys on the Rockstar setup. Now, most of you that have been trading with us for a while, you already know the basics of the setup and how I've been trading it. The uh, the kind of impetus for this event is because I've been doing a long and exhaustive study on um, opening up a few more trading opportunities, and might have to leave back Tommy. Okay. Leave and come back. All right, we are recording this. It will be posted in the members area for you guys to refer to. Uh, Now, we have invited a few other people here that have not started trading the Rockstar trade setup yet. Why they haven't, I don't know. But we've invited a few other people that we wanted to learn a little bit more about it. A lot of us have already been trading it, and this event is basically for you guys, but it's also pretty informational for the people that are still thinking about and considering getting the Rockstar. Um, Quick question: how many of you? Well, tell me. Most of you are NinjaTrader users, if not all of you. Um, what version of NinjaTrader are you currently using? I should have done a survey. Yeah, NT8 takes a bit more resources than 7 did. Supposedly, it makes more use of the threading of your processor, and it's supposed to be more efficient. Um, but that hasn't been the case as it's been reported to me anyway. That people are still noticing that there's a pretty good load on your processor. We do have some products that are coming along, some add-ons for NT8 that inside those add-ons there is a what we call a booster, and it helps the processor distribute the load more towards NinjaTrader than the other programs you have running. So that's part of our essential add-on suite that we'll be releasing here in the next few weeks, I hope. Okay, so by and large, mostly everybody's moved to 8. Some are still using 7. The Rockstar is for 8 only. Um, we are only developing now from this point forward 8 and higher. We'll no longer be developing for 7. NinjaTrader 8 gives us some capabilities that we didn't have in NinjaTrader 7. So we are certainly taking advantage of those. In fact, we've already starting to push NinjaTrader on their development because we're pushing the limits of what NinjaTrader 8 can do. So if you are considering, I see Joe, you're trying to transition from 7 to 8. If you need any help, if anybody needs any help on the transition, just let us know. Praveen's happy to help you with that as it relates to getting you up and started with your Rockstar since it doesn't run on 7. Okay, so again, this is a session for all of our traders. So I will be speaking mostly to our existing traders, but we have invited a number of people here today that don't trade the Rockstar yet. And but they have been considering it. So we went ahead and sent them an invitation as well. Okay, so to help you understand what I'm going to tell you about the trade setup, and to help you have more confidence in the trade setup, I'm going to back up and I'm going to tell you what started all of this and why it works. Okay, and which really does help when it comes to trading it and having confidence that you're trading it right and that you have an edge. All right, so if you look at a trading chart, you will notice this particular pattern repeated over and over and over again. If you use one of those silly hybrid charts, or Rinka bars or one of those, then you won't notice this. Um, I know a lot of people like to use those, but they don't. I don't understand why, but because they make pretty charts, they certainly do. But very very hard. Rinko, Renko, and some others that remove the time value of a chart, which is exceptionally important to trading. So anyway, if you look at any real good chart, you will notice this type of pattern repeated over and over and over again. You may not have noticed it. You may not have thought much about it. But if you look at, and on any time frame, could be a 1 minute chart, could be a 1 hour chart, could be a daily chart, you're going to see this type of pattern repeated over and over and over again. This pattern is not random. This pattern is because the market manipulators, the big boys, manage the markets this way. They're in the markets for a reason. They add liquidity to the markets. They make price move. Okay? They give the markets value. Therefore, they're given certain allowances to be able to do certain things in the markets that you and I can't do. Now, it costs them a lot of money to do this, but they get certain advantages that we don't have. So we can't really trade against them. But if you know what they're doing and why they're doing it, then we can take the same advantage of what they're creating. They're creating this environment. They're creating these reactions from people for a particular reason. Now, we can just sit there and allow them to do this to us, or we can try to figure out why they're doing it and then benefit from the reaction that happens when they're doing it. So if you look at this, maybe it doesn't mean much to you. Maybe this is just a basic chart. Now, just to be clear, and most of you have heard this before, so I'm kind of saying this for the few people that are here that maybe haven't started trading the Rockstar yet, or at least trading our setups just prior to the Rockstar, the speed tick and speed flash setups. So the whole idea of what I'm going to be talking about when I start going over the setups is all going to relate back to this. Okay, so it's very important to understand that we're taking certain advantages and we have a certain edge in the market, and so that you know what that edge is. And this is the edge. Okay, when the market makers are actually very busy doing their thing, to us, the markets often look very like nothing's going on. Price is just kind of channeling sideways, and to us it feels like there's really nothing going on. But truth be told, the market makers are buying up as much of the available assets as they can at the lowest price they can. They do this very slowly, very quietly, very stealthily. They don't want everybody to know what they're doing. Right? That because then everybody wants to watch what the big boys are doing, right? So we can follow them. But if they're not, if and volume is a good way that a lot of people think to follow what the big boys are doing. Well, if you follow the volume, you're going to be following what the big boys are doing. Well, surely they have figured that out. So they have these big supercomputers, and they run these programs in these supercomputers, and what they do is they try to corner the market on an available asset, and they want to do it at the lowest price possible. Now, they're not going to do this and hope that price goes up in this circumstance. They do it and then manage to get it, when price is dropping also. So we're just going to say price going up in this example. Okay? They don't leave things up to chance like that. They have the money and the power not to do that. So what they're going to do is they're going to accumulate very quietly as much as they can. And then they're going to wave their little magic wands, and they're going to run price up a little bit. And once that happens, they're going to then traders like uh, some of you who are maybe trend followers are going to see an opportunity to potentially take some profits. Perhaps you were short here and you got stopped out, or you got scared because of this sudden and unexpected move right here. Everything was just channeling, all of a sudden it just took off way beyond this channel. And you may have been waiting for it to drop, but it took off, so you got stopped out. So something happens up in this area, and regardless of whether people are getting stopped out or they're cashing out, they're going to cause an imbalance between supply and demand. And as soon as that happens, what happens with price? Price is going to drop down a little bit. Then it's going to start channeling again. Guess what? They're going to come in and they're going to continue to corner the market and get as many of the available assets at this relatively low price as they can. And then they're going to wave their little magic wand again. They're going to run price up. We're going to take advantage of that. Either we're going to jump out either for profit taking or because we got stopped out. And then it's going to happen again. But this time they're covering their tracks because they're going to sell all of the assets, or not all of them, but a lot of the assets that they were buying up earlier at the much lower price. Do they want us to know that that's what they're doing? Of course not. They're going to do it very quietly. In fact, this is distribution. This is where they're selling and making their profit. Everybody thinks, or a lot of people think, when you see the market suddenly just take off like this, straight up, that this is where all of the market makers are making their money. Oh, they're stop hunters. They went and took out everybody's stops and made a ton of money, and they're giggling and laughing all the way to the bank. Okay? Not really the case. Right here is where they made all their money. This is where they made their profits from their purchases down here. Okay? Remember, they're not going to leave these purchases to chance. They don't need to. They've got all the money and all the power. They can do whatever they want. All they got to do is be sneaky about how they take it from us. Now, they're going to sell off a whole bunch of the shares that they bought here, shares or contracts or whatever. They're going to hit their profit target in here somewhere. Now, they have bought so many, such a large portion of this market that even though they've distributed enough to make a big profit, they still own a bunch. And they own so much that they're able to wave their little magic wand again and really drive the price up. When all of a sudden people start getting stopped out, they start cashing out. Okay, so then what happens? Here's the final phase of their manipulation. They do this. They run it up on relatively low volume relative to what they own and what has been going on maybe back in here. Okay, so they run this up on relatively low volume. It's probably going to be higher volume than here, but it's still not going to be huge volume because they don't need to do a whole bunch of contracts. They're waiting until they hit a point. Now, you ever watch price run up and hit a pivot line or something and stop and then tank like this? Those pivot points are something that most people look at, including these big boys. Okay? So then they back up the truck and they unload all of the rest of their available of their assets that they have in this market. So suddenly the supply of all of the available assets for this market gets overwhelmed and overwhelms demand. And what happens when you have a larger supply than you do demand? What happens to price? Price drops, right? The bigger the imbalance, the more price is going to drop until it starts leveling out. Until people start wanting to buy at this lower price down here. The bargain shoppers are going to let it go for a while, and then they're going to have this point where they're going to buy again. Well, guess what? So are these guys. Why? Because they're going to do it again. They already made their profits right here, right? Go look at a chart, a time-based, tick-based, anything that doesn't remove, that doesn't have this smoothing to it. Thanks, Al. Just me. I've been doing it a long time. Just me. So as soon as they dump those contracts, down it falls. And there's nothing to stop it until it hits bottom where the bargain shoppers are gonna jump in. Looks like chop. Exactly right. This looks like chop, doesn't it? This is exactly what they want us to do. This is exactly what they want us to think. We can't trade this. Why would you buy, unless you're planning to buy and hold, why would you buy at this level? When price is just not really showing anything to us. Up and down, up and down, up and down. We don't have any clue what's going on. All right. So we have opportunities during this particular manipulation process. And most of you already know what those are because you've been trading them for quite some time. Here's your opportunity right here. Right after the magic wand, right? There's your opportunity. Here's your opportunity. Here's your opportunity. So, my mission has always been to find high probability opportunities to exploit, not make a bunch of money. We don't trade breakouts. Breakouts are a potential, in fact, a breakout helps us identify more closely when the next pullback is going to happen. Okay? All right, any questions on this? On the logic behind what's going on here? On why we do what we do? This is going to be helpful when I start to describe what it is that we're doing during the trades or while we're waiting for a trade setup, to identify a trade setup. I saw somebody typing just a second ago. Nobody typing? No questions? We'll move on if there's no questions. All right, this is a question and answer period. all throughout. This isn't a webinar. This is a training session, so I'll stop and I'll answer good questions. So they can start again, Carol. They don't do this once and then go home. Yeah, Tony, the term robot is really just a computer that are running some very sophisticated algorithms that are programmed by some really smart people. By and large, they are triggered automatically at certain price points, certain levels, certain events, to be honest, how they do it is way over my simple head. It is, Rich, and we're getting to that. But if you missed the first part, this is just a little bit more of a background to understand why we trade the Rockstar and why it works so well. Okay? You're going to have a lot more confidence trading the Rockstar trade setup if you understand what it's doing and why it's doing it. And this is the background to understand why it works. Okay? Drew, it's typically a three-way process because that's about an average. Don't ever get trapped in a three-way, assuming that it's three-way. Because as soon as you do, this isn't Elliott Wave, as soon as you do, they're going to spank you. As soon as you start thinking that this is a three-way process, it'll be a four-way or five or two. Okay? On average, I've noticed from empirical observation, I've not collected data, just observed, that 3 is about average. Okay, so I want you to remember this decision tree process, and we are going to get to the trade setup. But again, there's some background. You need to understand exactly how you're supposed to approach these setups. And when I get to showing you the setups, I'm going to refer back to this. I'm going to ask you questions about what I'm about to talk about. And we'll see who's paying attention during this part of the training, okay? Because this stuff is really important to understand. And when you're working on your training and you're practicing, this is going to help you. When you're writing down your rules and how you're going to take the Rockstar trade, because everybody has a little bit different, risk tolerance. As you're working on your rule set, this will help you. Well, that's easy, Al. I can tell you that right now. The indicators are telling you that a condition exists, so there can be no fake out. There can be no. We get these people all the time that say your indicator is generating false signals. Well, I can promise you it's not generating false signals. If you're expecting the computer to do the work for you and the indicators to do the work for you, then you're probably going to be disappointed that that maybe you're not winning as many trades as you think you should be, or that you see a Rockstar on the screen and price doesn't do what you expect it to do after a Rockstar. The Rockstar and all other indicators simply tell you when a condition or confluence of conditions exists, and it's up to you and your rules and based on your risk tolerance levels to make the decision if that setup is right for you. If you don't do that work ahead of time, Al, and all you're doing is showing up, waiting for indicators to tell you what to do, you're probably not going to be very happy. Okay? Indicators don't tell you anything other than a condition exists. They don't tell you to do anything. It's up to you to make that decision. Okay? And this is how you do that. This decision tree process, if then, have you heard about the if then? If you as decision making, if this condition exists, then do this. Everybody understand that? If this condition exists, then do this. Else, do this. Okay, so we do this every day, all day long in our regular life. If it's raining outside, don't go to the store. If it's sunny, go to the store. Okay, we do this all the time. If then, okay? So we're going to do that, and we're going to apply that to this trade setup, which makes it so much easier and so much less confusing. Because all you have to do is say, if I have this condition, and then I have this condition, and then I have this condition, okay? And anywhere along the way that the next condition doesn't exist, then we go to else, and we sit and wait, okay? So let's look at the first one. Strong push. How do we define strong push? Well, I just showed you on that previous slide, the accumulation and distribution slide. I just showed you the difference between what somebody here said, chop or channeling, and a strong push. Okay? This is exactly what it's going to look like. Okay? So, this would be considered a strong push relative to what price has been doing just before then. Okay? It's relative. And you can see it. Everybody can see it on a chart, right? So if we have a strong push, great. Now, if we don't, what are we going to do? Nothing. We wait. We sit and wait. So many times people have bypassed this because they see, perhaps like Al, you see multiple indicators on the chart. And you think, I should be trading. I'm seeing all these indicators. Yet that very first qualifying factor, the strong push, wasn't there. It didn't exist. So how can you go any further? All right, so if it does exist, and we have the strong push, then what we want is imminent. We want to look for exhaustion. That exhaustion is imminent. It's very interesting that all we have to do is read certain things and know that exhaustion is setting in. It always does. Everybody knows. You look at any trend, any push in the market, it's always going to get exhausted at some point. Price can only go so far before exhaustion sets in. So we want to know when that exhaustion sets in, so we start reading every tick coming into every bar relative to prior bars, and we start measuring that. And we know that eventually exhaustion is going to set in. Now, how do we know that? Okay, so this is our mo meter indicator. Everybody knows this. You guys are using this. This is our mo meter. It goes from black to gray to white. How many times do you see it go white for an extended period of time? How many times have you seen multiple white bars? Yeah. How many times have you seen multiple white bars on your chart? Those of you that Almost never. Not very many. So when this bar is getting white, exhaustion is imminent, right? You can almost bet on the fact that price is going to stop and turn just when the bar's turning white. This is our momentum indicator on the chart, okay? So that's one. Number two, everybody knows what this is, right? This pink outline, you know what this is. Overbought, oversold. So we're using a momentum oscillator to determine when price gets overbought, oversold. We put it right there on the bar where you can see that price is getting overbought or oversold. So again, yeah, Bill. Yeah, it'll be posted in the members area. And if you're nice, we'll email you a link. Connor's just been working on the members area, by the way. You guys are going to love it. It's a whole new, brand new members area with a brand new um, uh, video calendar on it with all the daily trade room videos on the calendar. Any training events like this will be on the calendar. You just go to the day, and whatever we did that day, if it's recorded, it's going to be on there. Yeah, he's been working real hard on that. It's really cool. Okay, so we're looking for exhaustion. So we all know that this is another potential for exhaustion. So now we have two. We have the Mo meter and we have an overbought condition. So we have a confluence of potential exhaustion setting in. We have our pullback alert. Now, before NinjaTrader 8, we used to use this a whole lot more. Because we now have this adaptive speed tick, we don't use it as much. Or haven't been using it as much. But I'm going to show you how we're going to start using it a lot more. Okay? This new setup, not new setup, but these new rules that I'm using for the Rockstar is going to be using the pullback alert. This is an awesome indicator, by the way. This is based on volume spread analysis. This is telling us what kind of volume is coming into this bar. Obviously, there's a lot of buying volume in this bar, right? Because it's a big up bar. But at some point in this bar, we hit a level where the sellers have been sitting and waiting. And so there becomes a lot of buying and selling. That's our third indicator suggesting that exhaustion is imminent. The sellers are jumping in as the buyers are getting tired. Okay, so we're pushing. The buyers are still at it. Uh-oh. Buyers are getting weak. Sellers are jumping in. That's when this prints. Okay? Imminent exhaustion. Very important in understanding what's going on here. The speed tick. This is really what started it all. This is what I was trying to understand what the big boys were doing, what the market makers were doing. This started with developing the speed tick, and I happened to have noticed that as I was watching time and sales trying to figure out something else, I noticed that when the time and sales started picking up real fast, price would move real fast and then it would pull back. So I had an indicator built. It's actually a histogram. And I used that for a while until I figured out, well, I can just, when the histogram reaches a certain level or threshold, I'll just have it print this on the chart. And so that's the speed tick. So what we're doing here is we're reading the speed of the orders being processed. Now, why do we do that? We do that because what I talked about earlier, the market makers have these supercomputers, and they can be, yes, I can, and they can get orders processed much more quickly than us retail traders can. Okay? Because their computers live inside the exchanges or real close by. And they've spent millions of dollars trying to increase their ability to trade just milliseconds faster. Okay? But that makes a huge difference. We, as a group of retail traders, can't even come close to what these HFT guys can do, these market makers. So reading, no, we're not screwed. This is awesome. We're not screwed because we can see what they're doing, and we know how all the other stupid retail traders are going to react, right? They're going to freak out because something unexpected happened. They're going to either cash out because they're going to scale on their maybe they're trend trading, they're going to scale out some of their contracts, make a little profit, or they're going to get stopped out, or they're going to just freak out. All right? This is why I want to know what's going on. So the more they do this, the better I get at understanding what they're doing, and the better I am at understanding when we get to exploit our edge. All of this is a confluence of indicators suggesting imminent exhaustion. None of these indicators tell me what to do. They only tell me that the conditions in the market are this. Okay? I'm the trader. I'm the decider. Not George Bush. I'm the decider. And I decide when I place a trade or not based on my trade rules. No, no. All right. So if we don't have, on this current example, we have imminent exhaustion. If we don't have imminent exhaustion, what are we going to do? What are we going to do? Tell me. What are we going to do if we don't have imminent exhaustion after a big push? Thank you. We're going to wait. Oh, Peter. I was asking Praveen about your problems and your problem with NinjaTrader 8. I need some clarity on what's going on. You said it's locking up or crashing on you. I want some clarity on what's going on with that. And that's regardless of our indicators or anything, right? It's just NinjaTrader itself doing that? Okay. All right. Well, I'm going to follow up with that. You mentioned something that the other day that you were struggling with that, and I know Praveen's been trying to help you with that. Um, but I'm going to jump in and see if there's something I can do to help. At least I need a better understanding of what the problem is. Okay. So if we don't have this imminent exhaustion, then we don't have any choice but to wait. Otherwise, you're just trying to force a trade. So all we need is for, oh, good. All we need is for a confluence of events until we can go on and say, okay, we have a strong push. We are showing imminent exhaustion. What's the next qualifying factor? No, I don't, Gilbert. That was in our continuation IE trade, and we don't do that in for NinjaTrader 8. We're doing strictly pullbacks now. That IE trade's a real good trade, but we've really laser focused on the pullbacks because they work so good. So that's been the pocket dot was good for the trend continuation setup. A change in momentum. So if price is doing this, but momentum has shifted directions, tell me what's likely to happen next. You guys have been trading this a long time. What's coming? So proud of you guys. You guys are paying attention. When price and momentum get out of sync, it's called divergence. Exactly right. When that happens, we have this divergent condition. Price is going up here. These divergent indicators, this is two indicators here. These two are indicators, and then this is um, a single divergence indicator that has 7 levels of divergence inside of it, including these two. Okay. So these are divergence indicators that we use to trade what we have always called the speed flash. No, you'd be getting in front of the freight train somewhere down in here, Gilbert. If you were trying to jump in as price was jumping up and you saw that it was going up and you wanted to take advantage of this push up and you jumped in or tried to jump in, chances are you'd get in up here, and that would be considered jumping in front of a freight train because you just get mowed right over on its way up. But eventually exhaustion is going to set in and it's going to back down. Okay? But by then it's probably too late for you. You're already smushed. So when price and momentum get out of sync, price will almost always follow momentum. So this is telling us, this divergence is telling us that momentum is going this way. So if we're exhausted here, we see all these signs of exhaustion. And we already know, even though price is moving this way and all this exhaustion set in and momentum is going this way, man, it's almost a slam dunk. It's time. It's time to go ahead. And if you don't have the change in momentum, then we're going to stop and wait. If you do, sell it. Sell it right there. Sell it on the open of that bar. That's the setup. Okay? So you notice I went through a decision-making process. If strong push, then look for imminent exhaustion. If no strong push, wait. If there's imminent exhaustion, great, look for divergence. If there's no divergence, just wait. Yeah, we're going to talk about that and when we get to the actual trading part. You mean support and resistance? Yeah, two different rules here. I'm going to talk about the current rules and then my new rules. Okay? So we're going to go through and qualify this. So this is very simple. Now, is it something that you're going to get good at just by showing up in the trade room and sitting there for a couple hours, taking whatever trades are available and then leaving? Probably, but it's going to take you a long time. You're going to get good at this decision-making process by doing it over and over and over again. You guys still hear me? Yeah, somebody tell Larry to restart his browser or to use a different browser. So this decision-making process, at first, it's kind of like driving a car, right? You have to think about every single thing that you're doing when you're driving a car. You have to think about when to turn your signal, and when to put your brakes on, and how far back to start slowing down for a yellow light, and when you do a lot of thinking when it comes to doing something new like driving a car. But the more you do it, not only the more comfortable you get, but the less you have to consciously think about it. Okay? So you become what's called unconsciously competent. Most of us are unconsciously competent drivers. And we got that way by doing it over and over and over again, where we can get from point A to point B and not know how many stoplights we stopped at, or how many right turns we made, or if we turned our blinker on or not, or whatever. You don't know. You just do it automatically. That's how you get good at this. That's why this is so easy. Is it easy at first? Is it simple at first? Well, it can be, but it's going to feel uncomfortable until you practice, till you get really good at it. Okay, and you all know about the fast forward program and how we practice and how we accelerate the learning process. Okay, so be using the fast forward program, or VIPs use the fast forward program. If you're not a VIP, let Connor know. If you want to use the fast forward program, let Connor know and he'll hook you up. All right, so now we've seen this setup, right? This is a trade setup. Prior to the Rockstar, we called this a speed flash or a speed Mac because this is our flash indicator, divergence indicator. This is our MacDiver divergence indicator. This is our speed tick, so speed flash or speed Mac. We've been trading that a long time. We also have this. This is our super divergence indicator, or super D. This will tell us, this could be up to 7D, could have a 7D on it, because 7 different momentum oscillators could all be in agreement that momentum has shifted directions. Under this circumstance, 2 of our momentum oscillators are in agreement that momentum has shifted directions. Okay? All right, so what do we have? We have an overbought condition, right? That's this pink outline. If it was oversold, it'd be a light blue outline. Plus, we have our speed tick right here, okay? Plus, we have our divergence. You wrap all of that up into one indicator, and what do you got? You got the Rockstar. So instead of having to trade this setup, which to me is still real easy, I'm perfectly comfortable with this. And for a long time, I thought you guys were too. I mean, I think you were. But I decided that based on some of the questions I was getting in the trade room, or I get emailed or whatever, I kept thinking, well, somebody's missing something. Somebody's not understanding something. What if I could combine these? Not this isn't in there, but what if I could combine these into a single indicator? It depends on what you how you set it up, David. For the Rockstar, you can set it up to only signal if there's one divergence, or you could set it up to say I want any one of these 3 or 4, but not these other ones. You could set it up any way you want to. This is why you can trade this. You can use the Rockstar, but there's lots of parameters inside to use it the way you want to based on your risk tolerance and your trade plan. Okay? I know some of you don't have this yet, the Rockstar yet. So here's how you can get it. Connor said he wanted to do a training day discount. He wouldn't tell me what that was, though. He just said, here, give him this coupon code for a trading day discount for anybody that doesn't have it. Most of you already have it, but if a few of you here that don't have it yet, he said, just put that code in there. So I don't even know what it is. He said he wouldn't tell me. I asked. He wouldn't tell me. He got that from Lisa, I think, being coy. All right, so that is it with the PowerPoint. Let's start looking at some trade setups. Absolutely. But it doesn't have to. That's the nice thing, Carlton. You don't have to print it on this bar here if you don't want to. It's already inside the indicator. So you could have a chart as clean as this and print a Rockstar, or you can have a chart that looks like this. Either way, and then you can actually have all of this and a Rockstar on top of that, which is really kind of my preferred way to do it. You don't have to do it that way. but that's my preferred way because I get a more of a heads up that if a Rockstar prints on the open of this bar, I'm ready to go. I don't just sitting there and I go, oh, there's a Rockstar, I'm going to trade it. I'll kind of have a heads up that a Rockstar, if a Rockstar prints on this bar, I should be ready somewhere along in here. Okay. Yeah, I got. I'm going to stop the projection for just a second, and I'm going to put up the training workspace. Um, I have three. I like to use three different oscillators. Of the seven, I have three favorites: the RSI, the CCI, and the MACD. Those are my three favorites. Those are the ones that I have turned on. You could turn any of them on, all seven of them on if you want to. All right, so I'm going to stop the projector here for a second. And I'm going to switch some things around. And this is a note for those of you. We invited a few other people. If you want to do the trade room trial, here's the code for the Rockstar. Sure, sign up for a room trial. We don't have a specific training schedule, Charles, because it's once you get the basics, it's just like anything else, Mark. No relation, but we've been friends for a long time. Hey, those are you guys that have heard me tell the story about sharing my screen with some Skype guys, and that's how I got started in all this. We would go around from trade room to trade room and find out and figure out this guy doesn't know what he's talking about or this doesn't work or whatever. So we all kind of became friends and we ended up just sharing our screens on Skype. And that was the beginning of all this. Mark was one of those guys. And we're not related, by the way. I'm a very attractive guy and he's really kind of ugly. So, um, yeah, the Rockstar it makes things a lot easier to understand, but you still but you still have to qualify the setup. You don't just look at a Rockstar and go, I'm trading it. Okay, you have to understand what's going on. Now, like I said, I never really thought that creating the Rockstar was necessary, but based on some of the questions I got and the confusion that some people were having, I thought, you know what? Let me just do this. Let me combine them, and we'll create one signal and see if that helps. Holy cow! You guys love this thing. This was like the holy grail for a lot of you guys, and I had no idea it was going to be as yeah. I know. I had no idea. You'll get used to it. I hated Ninja 7 when I first started using it. You guys surprised me with some of the stuff that I've been getting back from you about uh, trading, using the Yeah, Charles, that's what we trade every day. And Carol, sorry, I missed your question. Yes, absolutely. Um, Here is, I'm going to show here. All right, hold on. I was going to do this later, but you guys can see this, right? This is a video from today. Okay, this is in our trade room today on the CL, and actually, this is the chart from today, not a video. This is the actual chart. Now, this is exactly what I just told you about, right? What do we have here? We have a really nice strong push, right? We go from black to a light gray. Exhaustion is imminent. This was at 10. If you have your own charts, or just go pull up the CL and go to like 1037 or something. What is this? This is on market replay. Yeah, 1037 is where I stopped this. All right, nice strong push, overbought condition. So we have the first two things are in place. Turning on the indicator. Speed tick. Some of our indicators, you can turn them on and off without having to take them off the chart. That's what these buttons are here. We have our, oops, I turned that off. Super divergence, flash. Okay, flash isn't on that. So we have a big push up. We have our speed tick. We have our divergence. And yes, we actually had a Rockstar on that bar. And then what happens? Oh, and we also had, so this is our edge right here. This is all we're looking for. I also had a line of resistance right here. So we all entered this trade right here. We shorted it right here. I don't trade rallies. I trade pullbacks. I put the money in the bank and I sit and wait. Because I'm looking for, I don't ever think about what I missed unless I make a mistake. If I make a mistake doing what I should be doing, then I consider it something I missed. But this is just a setup for my edge. So I know where my edge is. Yeah, in this case, there was only one Super D, correct. And it was, as I recall, the CCI. And that's all I really need because that's a really strong indicator. Yeah, it does, Gilbert. Yeah, John mentioned that there. So this all happened today, and we did have some people doing trial in the trade room today. So I just wanted to show you all of the things, and so this is actually what we're trading. So what I'm showing you guys that are here now that have not gotten the Rockstar yet is that this isn't one of those things where you attend something and then you show up to the trade room and none of it's there. This is what we're trading. This is another one uh, that. Sorry, members. This is for the visitors. Um, so if you just watch a blank chart and you can just see the chart just kind of moving around, and it's really hard to kind of identify what's going on or opportunities. Now, if you start adding a confluence of events, you can start picking up. This is an old video. I just found it. You can start seeing where this confluence of events suggests that that something's going to happen. All right. So if you saw a chart that looked like this, and you're sitting there trading, Oh, sorry. Uh, how much time do you have to pull the trigger when the Rockstar forms and the bar appears? You need to be ready to do it, George. That's why practice is so important. That's why we have the fast forward program. You have the fast forward program, right? You have access to the fast forward. You don't? Connor, send George an email. Yeah, we can get you fixed up. You can, and that's the thing, and that's exactly my point. You can see it coming from across the street, particularly if you've been doing it for a while. So if you were sitting down to start trading and I gave you one of these, say on the open of the next bar, which would be down here. What are we going to do? That is a Rockstar. I'll make it bigger for you. For those of you using laptop screens or your phone or a tablet or something. Phone friend. So we're getting a lot of conflicting answers, and I'm going to suggest that those of you that are saying go long here missed the first part of this presentation, of this training. It'll work on a Mac if you run it in what Parallels? Yeah, Gus, it's in the you have to do the checkout, and then right before the checkout, that's where the coupon code goes. Yeah. Okay, so what's missing here for those people that missed this? This is suggesting that a confluence of events exists on this bar. Does that mean that this is a tradable setup? I went through the whole thing. I showed you guys the slides. What's the very first thing on that slide? Those of you that answered go long here or put on a buy order. What's the very first thing? I told you I was going to ask you this. There you go, Gerald. Strong push. Do you see a strong push here? Alan's right. Everything is wrong here. If I were in the trade room and this happened, what's likely? What are you likely to hear from me if I come on the microphone or not? What am I likely to do? Bricks. I'm probably going to say nothing. There you go. Alan knows. I'm going to say nothing. It's going to remain totally quiet because this is not a trade setup. Because item number one, and by the way, guys, I'm only doing I am going to cover first the standard Rockstar setup. And then I'm going to go into the new rules that I've adopted to add to my rules, okay? I haven't changed any of my rules, just so you know. I've added to my rules, okay? So everything that applied prior to me doing this testing and editing my trade plan still applies. So everything I'm talking about now still applies. All right. So we all know now that the first qualifier doesn't exist, right? Anybody? Everybody understood that last one? Why I didn't take that last trade? Everybody understand? Anybody not understand? Fabio. You're right. You're absolutely right. I probably want to check the settings. Why did the star appear? This star, or are we talking about the last one? The star appeared because there was a confluence of events. On the prior bar, we had a overbought condition. On the prior bar, we had a speed tick. And on the open of the current bar, we had a condition called divergence. Those three things came together all at the same time, and that's what creates a rock star. You guys are too much fun. Okay, so what are we doing on this here? Are we trading this or not? Alan answered it. No trade. Waiting for further exhaustion. No trade. Alan, I think everybody's just copying you now. You're right. No trade. This star printed on the open of this bar, which was down here. No trade. Very good. Okay. How about that one? It's the same as the last one, isn't it? It's exactly the same. This bar would probably not overbought when it opened, and it opened down here. Now, my rules say that I have to take the trade setup dictates that I have to have support or resistance behind my trade. This is the open of the next bar. How about it? Wait, Drew. What do I have to have a rock star? It was a trick question. Speed tick is inside of the rock star. Yep. So it was kind of a trick question because we have the speed tick on the charts in the trade room. That make it easier? Now what we really should have So what do we have here? We have an area of accumulation or distribution, or to you and me, chop. We have a hard push out of that chop. Maybe it's only 2 bars. You might want to change your rules to make it 3 bars. We have a major line of resistance behind my trade. Now, we have an indicator in the room called the OTS. This gives us a quick visual reference of where the bar opens. If we were buying, where the target would be, and the stop would be here. If we were selling, the target would be here, the stop would be here. Quick visual reference. So if that bar opened right there, and our OTS is going to tell us that bar opened behind or on and has resistance behind it, and we have a Rockstar. This, yeah, it is, David. It'll be in the members area. This is a point of entry. It's got a setting inside, Max, inside the parameter settings. In the trade room, I have it set to 15 seconds because usually that's about as long as it's going to take me to make a decision on this bar. And I like to get rid of junk on the screen. But if you want to leave it on all the time, you can. It's a setting inside the indicator. So I have 5 ticks or less from the point of entry to my resistance. If this bar opened down here, what am I going to do? This is 5 ticks from here to this green. Let's move it down just a hair so it makes it a little bit more obvious. And probably just for today, let's do something. Let's change these colors because it's hard to see. Pretend that's green. These are green. This is not a qualified trade setup for me. Why? The reason I want support or resistance behind my trade is because when we have imminent exhaustion, the most obvious place for price to run out of gas is going to be when it hits a brick wall. And you kind of think of these brick walls or the support and resistance as brick walls. When you're exhausted and you've gone as far as you can go and you can barely even walk, and somebody puts a brick wall in front of you, what are you going to do? You're going to probably sit down, or you're going to go around, or you're going to go back the other way. At least that's Donald Trump's theory. Now, if I enter this trade here, that brick wall is too far away. This is my stop right here, because I see I would be, if I were be entering this would be a short, right? I would be entering this to sell it here. I would be wanting to see this pull back here if I were going to take this trade. But what happens is this is my safety net. This is airbags. People have called it. If I get stopped out before this wall, this line of resistance has any chance to help me, then what good is it? So I'm not going to take this trade because I'll get stopped out right when I have this potential. 5 ticks or less is where this bar has to open from my resistance. Any question there? Everybody understand, and I'm not going to leave here tonight until all questions are answered. I want to make sure everybody understands what we're doing here. We're still going over the basics, but I think this is good to make sure everybody understands the basics. What is this red? That's the on the OTS. This red? Okay, so if I were selling here, my target would be the yellow, and the red would be my stop. Okay? If I were buying here, my target would be the yellow, my red would be my stop. And this can be set in the settings. Okay? You can set this to whatever you want. But my trade setup, my trades, 5-tick target, 7-tick stop. But TF works best. TF. TF. I think of that as the Russell 2000 time frame. We like the 1 minute time frame. Here's why. The 1 minute's going to be best at helping us to understand what the information that's coming into the market right now, so that we can make a decision right now to understand what's likely to happen right now. It is very difficult in today's markets to take information right now to understand what might happen 30 minutes from now. I know with a high probability what's very likely to happen in the next few seconds or the next couple of minutes. I don't have the first clue, and neither do most people, what's likely to happen 30 minutes from now, 15 minutes from now. You can hope that that's going to happen, but is it likely? Okay, so that's why we trade on a very fast time frame. The bottom of the pink candle. This is the open of that bar. So no, I would absolutely not sell there. I would sell here on the open of this bar, and these two bars with the information that's there tell me there's, along with this line of resistance, tell me there's a high probability that because of all the confluences inside the Rockstar, that price is likely to drop here. Now, I come out, I trade on the open of the next bar, and here's why. Okay, so we have this line of resistance, right? And you see it on your chart before price even hits it, right? Price is way down here. That bar hasn't even opened yet. You see this line, and it's a line of resistance on your chart. What makes you think traders are going to respect that line any more than they respected any other line? Do you have any proof other than you see a white line on your screen? Do you have any proof that this line has value to the traders that are currently trading? Any proof? Exactly. You won't know until it gets there. So I'm going to wait. Price may have run up and slammed into that line. I'm not going to place a trade on this bar. I'm going to watch this bar. I'm going to watch price. I'm going to watch how people are reacting to this line. And it can cross the line, I don't care. But I want to know what's going to happen. And if it pulls back, closes below the line, next bar opens below the line, that's my confirmation that this line has value to the people that were trading during this bar. I've confirmed that that resistance has value by witnessing that resistance has value. going to enter this trade with much more confidence that it's going to do what I want it to do. All right, Gerald. So to recap, set rules. Millimeter present. Yep. Oboe's present. Yep. Rockstar plus support resident trade entry on next open. Yep. That's exactly it. And look how simple that was for you to pick up. This is, I tell you what, if every person in the trade room is going to jump on this trade setup. Let me make sure I open below the line. 5 ticks or less below this line. If it's 6 ticks or more, no trade. If the Rockstar was over here, simple little change. Would I trade that? Alan brought it up because that is another setup. What's that setup called? Man, Alan, you're hitting it out of the park today. Like you did in the trade room this morning. Yeah, three winners in a row this morning, right? I will, Mark. Not in a row, but net 3 winners. Brian, it'll be in the members area. Are you a member? You're a trade room member, right? Or you own some indicators? You have access to the members area? Yeah, Connor's going to put it in there. Oh, yeah, he's going to email them too. All right, see ya. Okay, so I wanted to show you that so I could show you this. Okay, these are the rules that I've been using to trade the Rockstar, the Speed Flash, the Speed Mac for quite a long time. The Rockstar is a new indicator. Oh, by the way, the answer to this was speed tick. This is called a speed tick trade setup. Not a Rockstar, but it is a trade setup. We'll talk about that another time. But this, yes, this did qualify and I would have shorted this. Only static dome, David. Never dynamic. Okay, so I showed you all of that. I'm going to take this out of the way because this is not going to be important to the next part of this conversation. Now, one of the criteria that I have used all this time is making sure that my trades are 5 ticks or less from a major line of support or resistance. However, we get an awful lot of these, don't we? It doesn't, Carol. If all 3 conditions are not met, this will not print. You're just not seeing me put the other indicators on the chart. If I put this here, that might make it make more sense to you. But this is inside that indicator. Okay? The only way this will print is if all conditions exist inside the parameter settings for that indicator. So these are all the parameters. There's the speed tick parameter settings. Which thresholds you want to use. What multipliers we're using. All this is explained in the documentation. Whether to use overbought, oversold, or not. Which speed tick levels to use because we have 3 different threshold levels. What momentum oscillator to use for our obos indicator. And then all of the parameters for that. Which divergences we want to enable to generate a signal, and thus these are not enabled. Whether we want any of these, or does it require all of those to generate a signal? So say you only want a signal if RSI, CCI, and MACD are present, are showing divergence, then generate a signal. But if only 2 of them are, don't generate a signal. So you can either have any of them or all of them. We use any. But if you want to be more precise and maybe a little more conservative, you could make it all. No, Carol, it's only for 8. So we have all the parameter settings for the oscillators for the divergent signals. We have the draw settings. You know, you can change colors and size of the Rockstar. You can actually change the Rockstar indicator to something else if you want to. And then there's some other indicators in here, other settings in here that you guys don't know about yet because that comes out in the next version. I already have the next version on this computer, but you guys don't get it yet. I still have to test it. You're going to like it, though. And it's going to be relative to what I'm about to show you. Okay, now, I've said all of that to get us to this point, which is why many of you are here, and that is to learn more about the new rules for the setups. In the trade room, you have noticed some dots. These dots are very important. That's correct, Tony. That's the whole point. That's why I do things the way I do. I don't want a whole bunch of indicators on my charts. It makes you look like you're really smart to people that don't know anything about trading, but having all that mess on your charts does not help you be a better trader. In fact, having all of those indicators on your charts creates all kinds of shades of gray when it comes to your decision-making process. I figured that out about myself a long time ago. Tell me if this is too loud. I've got a fan I'm going to turn on here. Is that too loud for you guys? It's just a little fan on my desk. Getting warm in here. It started with you and then went downhill. Are you getting windy? Yeah, it feels good, doesn't it? Okay. For those of you that have been in the trade room since we've had the Rockstar, and those that have gotten very excited about the Rockstar, and have started actually trading the Rockstar without support and resistance, it didn't go unnoticed by me. I understand why you're so excited, and I understand not wanting to use support and resistance. Empirically, I noticed this and thought, I think this is probably a good idea. Yet, I couldn't do it myself until I could confirm that doing it without support and resistance has an equal to or better edge than the edge I already have. The nice thing about it is it's about the same as whether I have support or resistance or not, only if there's a Rockstar there. And only if there's a pullback alert. And only if it's overbought or oversold. You take that off. I'm going to take this. We don't really need it there. Now, this is where the dots come in. Okay? I don't have support or resistance behind my trade. And I still won't trade that because this trade setup must have, if it's not going to have resistance behind it or support behind it, I've got to have more confluence on this bar suggesting exhaustion. I need to make sure I have more exhaustion potential. Okay? So I'm going to have the pullback alert. Everybody understand that? Any questions so far? Yes. Well, if I go to Rockstar, I'll know there was a speed tick here anyway, right? So even if I don't have the speed tick on my chart, but I got a Rockstar here, it's still it's there. Maybe it's accidentally behind the bar and I didn't see it, but it's there if I get a Rockstar, obviously. Yeah, good one. Try to get that one by me. You can't fool me. Okay, so here's the next criteria, and here's where the dots came in. Think of the dots as a channel, okay? When price is channeling, price wants to stay in a channel, okay? That's when it's chopping around and it's not really doing much and there's not real strong sense of exhaustion. When price breaks out of a channel, there's a higher probability of exhaustion. There's a higher probability that it's only going to go a little ways out of the channel before it comes back. Okay? Like a regression channel, like a Keltner channel, like a Bollinger Bands. Okay? So think of these dots as a channel. In fact, as we go out throughout the day, sometimes they'll be far apart. Sometimes they'll be close together, like this. So they move throughout the day, throughout the session. If this trade setup takes place inside the channel, or we'll call this a zone, so inside this zone, between these dots, there's no setup for me. Because I need more and more, because I'm excluding support and resistance, I need more potential for exhaustion. I need more proof that the sellers in this case are very active. No ricochet. I did not use the ricochet for this. Only the pullback alert. The ricochet really wasn't helping much. Here's the funny thing about the ricochet. You're going to get this, and this is a ricochet for those of you that are just visiting. A lot of times you're going to get these together anyway. Okay? The ricochet actually has a lot less going on technically. It doesn't give me as much information as the pullback alert. And remember what the pullback alert does. It's telling me that at a certain point, usually in the top part of the bar, the sellers have become exhausted, the buyers have become exhausted, and the sellers are now very interested and are trading like crazy. And there's a fight going on here, and that's what this dot means. Okay. So if we're still inside the channel, I don't have that sense of exhaustion enough, although I have a lot. And now this is going to be up to you. And I know that Ken and Laura and a few other people in the trade room, they're not going to worry about the pullback alert, or they're not going to worry about the dots necessarily. I mean, they might. They've been doing this a while. They've kind of got their own set of rules. But the dots are there just to give me that extra, and you're going to be surprised when you start using the dots how great they work. If I'm here, I'm trading it. Okay? Because this open outside, and it can open on the line, on the dot too. Okay? If it opens on the dot, it qualifies. You don't have them yet. They're not available yet. We're just using them in the trade room right now. I have some tuning I need to do to them. I've been using them in the trade room to trade with for what, a week now? Almost 2 weeks now. You guys don't have the dots yet. They're only in the trade room. And this is the way I generally introduce something new, a new indicator or a new setup or whatever. We'll see it in the trade room first. This gives me, I've spent a lot of hours on this testing. There's a difference between testing something for a lot of hours and trading something for a lot of hours. So I needed to trade it for a lot of hours. I wanted to see what other people thought about it, how it looked on the charts. A lot of times the testing and trading, they're not the same. So these will be available, I don't know, in the next few weeks. Huh. There we go. Okay. All my other rules, these are not pocket dots. They're just happen to be dots because that in NinjaTrader only gives you certain symbols to use. They give you a dot and a square and a line and a diamond, and I guess I could use diamonds. You know, we may find out that diamonds are easier to look at here. A diamond, maybe. We might switch it to a diamond. I'm just using dots now as a point of reference. So this is going to qualify for me in the trade room. Some of you may be so comfortable and have already been trading this without support and resistance behind it that you may want to just use the dots and not worry about pullback alert. I'm still going to use the pullback alert because by far the probability was higher when the pullback alert was present than when it wasn't. Let's see. Did I miss anything? I'm looking at my list here. So we're actually going to call this a naked Rockstar. That's going to be the name of the setup, naked Rockstar. If support and resistance is behind it, it's called a Rockstar. If it's not, it's called a naked Rockstar. And it's naked. There you go. So you'll notice in the trade room, see, historically we've used these two. There are 5 levels inside of the pullback alert. 5 different types of price action that we can measure with the pullback alert. We've only turned on 2 of them up to now. During my testing, I thought to check the first one, the one that we had turned off, the one that has a blue dot, number 1. And it worked just as well and gave us a few more opportunities. Okay, Tony. Snow, huh? That sucks. Well, any of the first 3. If you use the second 2, that's for low churn. That's when price is really nothing's happening at all. So yes, 1, 2, or 3. Any one of those 3. 1, 2, or 3 is what I'm going to use here. Now, if this sorry, I was reading my rules. Never mind. I will take this trade if I have. This is just something that actually this goes back to prior to this new rule. If this bar is not overbought, I'll still trade this. And that's been my rule for forever. The dots are always on, Max. They stay on the chart. It's just a channel relative to what's been going on the last 10 bars or so. It's just going to help identify these real strong pushes from my mind. Now, this channel will adjust relative to the last 10 bars. That'll be the adjustment of the dots, whether they move in or out. Yeah. Which is also, they set inside the parameters. Yes. I need if I have a Rockstar here, that means the speed tick is here. Whether you see it or not, if I have a Rockstar here, that means this bar had a speed tick on it. I just like to leave the speed tick on so I can have my finger on the trigger. So when I see a bar jump and generate a speed tick and slam into a line, my mouse goes automatically to that dome. Any other questions? I'll stay here all night. I don't care. I got nowhere to be. I want you guys to understand this. I know there's going to be questions in the room, and that's fine. This is a kind of an overview to give you an idea of what I'm doing and looking at. I'm certain that there will be questions in the room, and I'm happy to answer all of them. Yeah, what else does a guy need? I have a fan. I ate a late lunch, so I'm not hungry. If the speed tick candle closed above, yeah, I don't really care where this bar closes. It's all about where the next bar opens. Did that answer your question? Yeah, I don't care about the close of this bar. I care about the open. Is NT the same thing? NinjaTrader is the trading platform that we use to bunt trade. Didn't I answer that? Didn't you ask me that? It opened on the relative to whatever the this is the OTS, right? And I can show you. I'll show you the parameter settings. I don't think I have it on this chart though, but I can put it on there. So you can say whether you want it to just be lines or lines with arrows. I have it removing after 15 seconds of being on the chart. I have it set to a 5-tick target and a 7-tick stop. And then, of course, you can change the numbers or the colors. Colors. Oh God, Carol, no, I don't trade all day. But what it does require is work. You have to practice. You have to. It appears on the open of every bar, Max. You have to practice. And it takes time. And it takes hard work. So if you're looking for a shortcut, this is probably not it. However, I'm always looking to make things more efficient. But in my experience, trying to make things easy usually makes them much harder. The only shortcut that I have found that works is approaching trading just like anything else you want to get good at. Any other skill you want to build. So, for example, if you want to be a good runner, the more you run, the better you're going to be at it. Okay, and if you can accelerate that your training by doing it twice a day, then they're going to be that much faster. You're going to get, in condition, in shape that much quicker. This is the same way. This is the same thing. So I don't see. So here's my theory. Okay. Yeah, futures and forex. I trade from 9-ish to noonish, and that's when I trade. Now, there are setups later in the afternoon also, but I don't trade in the afternoon because you're going to get probably half as many setups. And my theory is my time is better spent practicing 50 trade setups versus hopefully taking 3 or 4 trade setups. That too. 3 or 4 trade setups that might come along in the afternoon session. So for efficiency's sake, as far as getting more experience, practicing is going to be the best thing to do in the afternoon, not trading. Now, I can say that all day long, but we have traders that trade overnight. They trade in the afternoon. They do, they just like to trade, but they also get their practice time in the evenings. We have a program called the Fast Forward program that teaches people how to practice and then also provides you some tools to practice with. Good, Mark. Yeah, you have a great evening too. Hope it was informative. I know we're going to have more questions, but wanted to get you Rockstar owners up to speed on my new. And you know this whole thing I came up with here, these dots that I showed you, and using the pullback alert and not using support and resistance. You know how many hundreds of those setups I tested before you got to have a huge number of data points to be able to zero in on your edge. And it took me a long time to develop something as simple as that. The cost, well, the Rockstar is $550 online, and then we have some bundles also. Or if you want to get it included with a bundle, just talk to Connor. Um, Connor, put your email back in there. Whoops, man, I'm making a mess of this. I was trying to get, I don't know. Connor says he can't type in there anymore. Let's see if I can type. It says you're typing, Connor. There it is. How much for the dot? You just want one? You're going to go into it slowly? Buy one dot this month and then the other dot the next month? We're not selling the dot yet. Got to come up with a name for it. I think it's going to be Naked Rockstar Zone. Yeah. Yeah, VIPs will get it for free. There'll be no charge to VIPs for the dots, just like all VIPs got the Rockstar for free. Okay, well, I'm not seeing any more questions coming in. So I hope that that's all covered. I'm not sure, Drew. I've been so busy with some other stuff. Uh, I fell behind on a lot of stuff, finishing up the testing on this setup that I've been working on. I put everything off to the side. Yeah, Alan, sure. So I have some other things I got to finish up, and I wanted to run them in the trade room. I don't know, maybe 3 weeks. I hope. Fingers crossed, 3 weeks. Geez, you don't ask for much, do you, Mark? Guy just gets here and he's already asking for double dots. Okay, George, that's my rule based on my testing and observation that I want to have. If it's going to be a naked rock star, I want to have an overbought. Where's that? An overbought condition and a pullback alert on this and a speed tick on this bar, and then I'll short the rock star on the next bar without resistance. That's my rule. That's what I'm sharing with you guys. If you want to do testing and decide, you know what, I don't need no stinking dot, this dot, or this dot, I'm just trading it without it. That's fine. That's up to you. This is the way I'm trading it. If this opened in here, whoops, what happened? If that bar opened there, no trade. Yeah, but you're going to remember it, aren't you, Charles? I would be fading the trend most of the time, Max. That is correct. But which trend? There's inside of every trend. There's another trend and another trend. So which trend am I fading? It's hard to say. I might be fading 2 and not fading 3. Hard to say. Not the body. It's just this dot. That's why. Because it's between the dots. See, there's good dots. Yes, in most of our packages, these are called our FT reset lines. So look at some of our bundle packages. The dots will be included in the VIP package. We will include them in some other package, but they're not even a product yet. They're not going to be terribly expensive though. This is not going to be this didn't take the same processing power as this did. So not going to charge a whole lot for the dots. If you get VIP, you don't have to worry about it. You get everything. That's what I'm using them for, Gerald, yes, to improve the naked Rockstar setup so that I can take it without resistance behind the trade. I don't need that anymore. I can trade that. Yes, dots are only for NT8 because we're only developing NT8 forward. NT8 and whatever comes after that. As you saw were you here at the beginning, David? We kind of did a little poll of who's using NinjaTrader 8 and who's still using 7, and I'm guessing that about 80% of people are using 8 now, and only about 20% are still using 7. So I'm not going to spend time or money developing for what's ultimately what we already know is going to be a dead platform. All right. Well, everybody have a great evening. I hope this was valuable to you. If you think of questions later, by all means, send it to us at support@theintentionaltrader.com. And um, we'll take care of you from there. All right, everybody. Have a great evening.